Good afternoon, everyone. This is Chrissy from SolsticeATR and Vulcan Capital Research. What I'm going to do is go over October 13th for the following week for the market outlook till Friday, so you guys can get a better feel of what's going on. Remember, US and China are trying to create a partial or full deal with China with agriculture, technology, consumer products, and other stuff that they purchase, as well as the tariff, cut down on the tariff. Two, nobody's talking about the Brexit exit. Nobody's talking about the North Korea, dismantling their nuclear weapons, as well as the Saudis and Iran crisis in the Middle East. So first of all, the market has optimistic to push higher. Plus, the Federal Reserve Board said, we will try to ease interest rates. Does that mean is the plunge protection tape going to solve the problem for us, or it's going to cause us more headache? Let's go over, first of all, the weekly chart on the SPX, the NASDAQ, the Russell, and the Dow Jones Industrial Average. On the weekly side, we had a hammer go down and push back up. We had a hammer come back down into the gap and push back up. But unfortunately, we closed on a bullish sentiment, but on Friday we sold off into the close. Is the deal done? Has it been signed or not? Let's see what the outcome will be Sunday afternoon, Sunday night through Monday to see what the resolution is. If I look at it on the daily, go from weekly, go to daily chart. And the daily chart, you can see where the gap is. I marked it. This was the week before where the gap, we retested it. This is no longer valid. Remove the drawing. What I'm doing is basically for the smaller channel, I'm using a yellow candle to the downtrend. And for the uptrend, I'm using a baby blue connecting the lines. But the wider ones are usually my orange burgundy colors. We looked up above this triangle. We cleared the 50 SMA, the 50 fib, and the 18 SMA. We got to keep an eye on that gap. If we don't fall back through the 61 in this gap, which is my box, in order to continue higher, we have to clear this consolidation at the 39,392 in order 395 in order to continue higher. If you look, where did we go to? The high was 39,437.13. So we have to be above 39,440 in order to continue higher, in order to get to the prior highs where was we fell through, consolidated, pushed up, then fell through and came back up. In order to continue, we have to go higher. But remember, on Friday, they sold into strength. Let's go down and start with the small cap, RTY. And I'm using these candles without the overnight action in them to show you what has happened. We broke through that first channel on Thursday. We had a nice push with the Russell. Friday was very strong, but into the close we could not clear the 1530.4 area, which is my DMI ADX crossing. When we fell through and we came back up, this became an area where it's very important that the Russell has to, in order to continue high, you have to clear this channel which I drew, and at the same time the 61.8 in order to continue back to the upside of this triangle. If I zoom down a little bit, you can see it. There's a triangle up here, there's a triangle down here. We retested it, but the major one is now here and the other one's up here. In order to continue, we have these two minor channels in order to continue higher. If not, we fall back down to the prior low. But let's see what Monday holds for us. This is the Russell. Let's take a look at the NASDAQ NQ. The NASDAQ is a little bit more on the bullish side compared to the Russell due to two factors. This was the last week's push down and push back up. And if you noticed on Thursday was a very nice hammer. You cleared the 18. When we came back in the overnight, we came back to the 18 simple moving average and we pushed higher above the 61.8. But on Friday, they sold into strength. If we clear this channel to this oval, these are the three prior highs here. You can see it one, consolidate, break up, come back into this consolidation. We broke up, couldn't get to the above, and fell down into halfway, 2/3 of this move, came back up. And where are we sitting at? In the upper distribution area. This area has to hold in order to continue. If we fall back through the 61 and this channel, the backside is this area. If we break up, look for the upside. We are in an uptrend between this baby blue channel and this baby blue. We have a midpoint right here. And where are we sitting on? Right underneath the midpoint. There's a 38% here. There's a 61 up between those two channels. See that baby blue and this baby blue? I'm trying just to explain myself so you guys can learn a little bit more how to look at channels, patterns, and what I'm looking for in the overall market. Let's go back now to the Dow Jones Industrial Average YM, and I'll do the ES a little bit more in detail. I'll do it, then I'll go to the volume profile at the end. If you notice, the Dow Jones Industrial Average is in that triangle. It tried to look up. It went to look up above the first breakout, pushed to the high, missed the POC, and came back in on Friday. The close is still above the 61.8. It's very important to keep an eye on this area. That means it does not lose it in order to continue higher. And remember, the 2700 area, 2740 area will push it eventually to the prior highs and a breakout. If it cannot come back in and it falls through, look for the backside of the 38.2 Fib, then the bottom of this channel and the 200 SMA. I'm not trying to be bullish or bearish. I'm just giving you scenarios. Look at what the market gives you, not what you think. Okay? Let's take a look at the ES. And once again, the ES, I'm going to go to the weekly first before we do the other one. If you noticed on the weekly, let's just come into this area. If you notice the weekly, you had a hammer down, push up, hammer down, push up. And we basically closed above the 18 SMA, but inside the up channel, this channel and this channel here. These two channels are very important. If you draw one right in the middle of it, we're right in the center of these two channels. This one here that the computer grabbed and this one here. If I zoom in, you can see it a little bit more in detail. That way you can see this channel here, halfway through it is right in here. So keep an eye. If we break up and clear this oval, it will continue for a breakout to the upside. If I go to the daily chart, you will see it a little bit more in detail. Let's just zoom down a little bit. You can see that push up here above the 18 and the 61.8. We have to stay above the 2962 area and the 2954 or 54 area in order to continue higher. If we fall through the 62 area, be careful of that gap in the overnight action, because we went looking down and pushed higher. And on Friday, they sold into strength and we closed at the 70. Most sentiment is around 29, 78, 77 area for the Fortune 500 in order to continue higher. So remember, it says it's bullish and our label shows 29.20 and a quarter to be bullish. If I just go down to a little smaller time frame, like an hourly, I just want you to understand we are underneath the 29.82, which is bearish because the sentiment changed trend and we fell down back to the midpoint average true range, which was the long was 29.68, call it, and there it is. That was in the overnight. We retested it once. went up again and fell through on the shorter time frame. So we have to get above the 78 again in order to continue higher. So remember, what we see trade, what you see, not what you think. And I will show you one on the 15-minute to show you something very important. I know I got a lot of lines here. You're going to go, what are these lines? Don't worry about them. These are Fibonacci's. What I'm trying to basically tell you guys, when we consolidate, we fall through, consolidate, then we break up. We consolidate, then we push higher. Look what we did. We did an M pattern on Friday. It was very hard to gauge because it was bullish on this gap. We came above this gap in the overnight, continued higher, and we broke the 29.74 area in the overnight, 76, 78. It was bullish. Where did they push it? Consolidate and pushed higher to the 94. 94, 95, 93 area was the prior highs on the daily charts, which was the consolidation before we fell back down. In order to continue higher, we have to go back above the 78, 82 in order to push up and continue. If we cannot and we fall back in, what's that? We fall through the gap and eventually come back to the bottom side of the channels. So remember, on the daily chart, look at what you see in trend. Don't think, hey, I'm smarter than somebody else. We are a small consumer compared to the institution. When the whales start pushing one direction, don't be biased to one side. You will get caught and they'll cut you up. So this was the prior consolidation. You see it up here. We broke up, came back down. We broke up. This was the last 5 days. Candle 1, the high was 91. Candle 2 was 95. Candle 3 was 93. Candle 4 was 86. And candle 5 before we fell down was 94.50. Where did we test? The prior consolidation high at 94. In order to continue, you have to clear this consolidation to go higher, and we don't want to fall through this gap because this down channel will get us back to the bottom of this channel and this drawing that I drew down here, which will be the consolidation before it fell through. So we don't want to see this consolidation or fall through these candles and we come back in. Let's take a look at GC, which is gold. I'll do all the futures first, and I'll do the volume profile at the end on ES. Gold, I want you guys to remember my 1508.6 is my line in the sand for gold in order to be bullish. If it falls back in, I would like to see the consolidation. Remember, I had an oval here, which I took off, and I had another oval here last week in the video. I still like to see gold in this consolidation between the 1450 area and 1478, fall back through to come back to this longer time frame channel. See if it holds in order to position a long position to go back up. If it stays below the 1508.6, it's still bearish. My computer says what? 1503.7 is bearish. So be careful of gold unless it clears that area to come back up, because this is an open cone. If you can look, it's an up channel and you got a cone and you got a down channel here. So let's take a look at oil, CL. Oops, let's just zoom in. Okay, CL, this was what happened in between the Saudis and Iran when they got their oil hit that week. They gapped it up in the overnight on site, and this is what happened. Everybody saw, oh, it's going back to 70. Oops, sorry guys, we're gonna come back to where it broke out. It consolidated for 3-4 days, couldn't hold it, fell through. We fell through the 56, 57 area and the 54 area, which was most of the consolidation happened, and we went back to the 50s, consolidated in this prior down move. You see it, we retested it once, twice, 3 times, 4 times. Now we tried to go back up. This was the Thursday, Friday action, because we consolidated side, we didn't know what to do. They tried to push up. This was the first breakup in the channel, was here, pushed up. If we stay above the 54.70 area, it's going to be okay. If it falls back through, be careful, because remember, My label says 52, 54 is bullish. You are trying to consult. If this kind of creates a cub and pushes above the 38.2 back to the 50 Fibonacci and the 200 SMA and the 61.8 would be great. I'd like to see oil at a higher price, but I'm not telling everybody to jump on oil to higher, because remember, United States before was relying on oil. Now we are a producing country which we can export instead of import oil. So our oil, there's an abundant percentage of it in the US. So don't be biased to what we used to think and what we do. Just watch the chart. It'll give you a trade, long or short, and you can actually get a swing on either side. Let's take a look at the VIX slash, I'll do the VIX, the ETF instead of the VIX. And I'll show you something, guys, that has happened to VIX in the last couple of weeks. We'll go from here. We'll just go from April. I do have a fib on it that I drew from prior when we broke up. This was the consolidation. I'll take that fib out, remove drawing. We're going to do one which is a longer time frame. If you look at the VIX, this was the prior high. This was the prior low. Now we can take this area, the 13 area, to this new high, and we can draw a fib. So what we do, we grab the computer, go to the drawing board, and we can do one. If you notice, the computer already did it. So it fell through the 61.8. So where's your consolidation? The computer grabbed it. So what we can do is go to a longer time frame. Where's the high? Where's the low? There's the low right here, which is 1303, to this high here, and we can draw it. Either way you draw it, remember the 61.8 would be on top if you're looking to be bullish in it. If you draw it from top to bottom, the 38.2 would be the line in the sand. It'll be vice versa, and the 78 will be the 23 if you draw from top to bottom or bottom to top. So in order for the VIX to continue higher, we don't want to see VIX below the 14 area, because that will eventually bring us back down in that open cone to the lower side of the market. If you notice, this is the high, this is low, the computer grabbed. We fell through the 61, became inverted, and we fell through the 50 to the 61.8 and fell through the 200 SMA, the 18 SMA, the 50. So as long as we are coming back in, we have to hold this consolidation area that broke us up, in this area here, which pushed us higher, in order for the fear gauge to change the trend. There's no fear so far. So last week they had pushed it up, brought it down, pushed it up again this week, and brought it back down because of the trade wars and what's going on in the international market, the global markets. Remember, nobody's talking about Germany, nobody's talking about the Brexit exit, nobody talking about the North Korea, dismantling the nuclear weapons, other than the China tariff trade wars, which are in negotiation with US and China to solve the problem in agriculture, the tariff tax, technology, consumer products, and other instruments that we import and export to each other. If this is an agreement, partial agreement, and this will look good, the Feds don't need to step in. But if they do, then maybe everything will stand out and the VIX will give us at least a way to look at the market. Let's take a look at some equity instruments. I don't talk about my swing trades, but I want to do is just go over a couple of them. Let's take a look at AAPL. AAPL actually on Friday pushed very well, and it stayed above the 228 area, which was the prior consolidation. It looked up and eventually broke up. This is the gap that you have to be careful, and you don't want to fall below the 233.40. That was the prior high. If we fall through that, be careful of it, because that gap won't hold it. Eventually we'll come back and fill this gap down here, because remember, you have this gap here in this consolidation nobody's looking at. I don't have it marked on the computer. So be careful of Apple being at that high unless the deal is done well. They think good, technology is not going to be as taxed. Manufacturing is great. Good luck. So that's Amazon. Amazon didn't do much. We know that it is bullish. It is above the 225 area in order to stay bullish. If it falls below the 1715 area, be careful of Amazon. Let's take a look at BABA, BABA. BABA came into this push up, came back to consolidate, pushed up, came back in consolidation area 3 days, and we had Thursday was basically a neutral inside the, the can looked up, came back in, stayed positive, but on Friday we had this gap between these two areas. In order for BABA to continue higher, in order to be bullish, you have to be above 172.25 cents to be bullish. If you fall under it, be careful of it, because that's your 50 fib. Your 38.2 has to hold in order to continue. If it falls through it, look out back to the bottom side of the industry, okay, of the chart. Let's take a look at FB, Facebook. Facebook had a good day on Friday, but it sold into strength on Friday into the close. It looked above the 61.8, got to the upside of the channel, 161 SMA, and the channel failed, lost the 61.8, got to the 50, did hold the 50, it's holding the 18. Be careful it does not lose the 38.2. And if you noticed, Facebook has to be above 180.39. I'd like to see Facebook's always above 181.50 in order to be bullish. Be careful of it, okay? Let's take a look at Google. Google did the same thing on Thursday, Friday. This was the last week push up. Came back down, pushed back up. It couldn't clear it. We are in a symmetrical triangle in a very sharp instrument. In order for Google to hold, it has to hold the 1206. I'd like to keep it above the 1212 area in order to continue higher. Let's take a look at Goldman Sachs. I'm just going through a lot of stuff, so very fast. If you notice, the banks did well. They looked up, couldn't clear the channel. We had a sharper channel here that we broke through. This is a professional gap. Do not lose that gap. It's below the 18 and the 50 SMA. In order for Goldman Sachs to continue, it has to stay above the 206 area, the 205 area, in order to continue to the 208, 212, to push back up into that console, because it's inside that consolidation where the breakout was when it tested. You see it, this candle is inside it. It looked up, couldn't get above this upper area. In order to continue, it has to go up or it falls through. Let's take a look at Nflx. This is a good example. Netflix on Thursday got downgraded. What Netflix did to all those analysts on that downgrade, ripped everybody's head off, being biased to one side. Whoever shorted Netflix on Thursday got their butt kicked in the market. So be careful. Trade what you see, not what you think. Do not listen to anyone, and don't be biased to one side. It's still in this down channel, up channel, down channel. It consolidated around the 250 area. Remember, I had that over. I said, look, if Netflix can continue, it baselined, looked down, pushed back up, looked back down into the 265, and on Thursday just took off. Now it tried to look to the 50 SMA, failed on Friday, but stayed bullish. This candle still bullish. Is it going to continue? You have to be careful it does not lose the 278, 277 Netflix in order to continue higher. If it does, that's great. Then look for the 38.2 where it fell, the 300 area, which was a big baseline here, 305 in order to go back to the 50 and the 116 SMA and the 200. If it falls through and loses that area, the 278, 277, be careful of it, because remember, the computer's saying bullish 273, more or less. So watch what you see in Netflix. Let's take a look at Tesla. Tesla, the rounded bottom, fell down, went up, fell down, went back up, and you had 1, 2, 3 continuation. Thursday was an inside day of the price, just closed a little bit above it on a doji, and on Friday looked up and fell through onto the close into strength to close inside the prior candle, value area high to the value area low, but it stayed above. It's bullish. Watch what it does. Tesla is a very fast animal. You can basically, I don't like swing trading it. I like day trading it when there's momentum in it, because you get a piece of it. Let's take a look at LMT and Disney. I'll do those two and I'll finish up with the ES volume profile, what I see. Lockheed Martin, I did not like it going below the 282 area. It fell through it. I would like to see Lockheed Martin stay in this up channel in order to continue. If it loses this channel in this symmetrical triangle, you can do one here, which is a little sharper. I'll show you what you can grab this candle here. We don't need a fib, we need to grab a candle. Channels, okay? Grab this area here. Do this candle here. Here we go. And what we do, we highlight it with a baby blue edit. So that way, remember the up channels, the inside ones, we've been doing them with baby blue, smaller little dash lines. And the down channels, inside ones, we're doing them with yellow and small dash lines. So the wider ones are usually the orange burnt one on the top and the bottom. So this is Lockheed Martin. Remember, it's in an up channel symmetrical triangle. We don't want to lose that 50% of this area here, then it'll eventually fall through. I'm not being biased on Lockheed Martin. I do have Lockheed Martin for a while. Let's take a look at DIS. DIS, I started positioning a trade to the long side, okay? I may be wrong because I'm holding the 200 SMA. Remember, there's a professional gap here on the earning. You see this area here? From here to here, there's a big gap. If Disney falls through this gap, there's nothing to hold it till that consolidation here and here before you can get a position. If you like Disney for a long position, look around the 118, 117 area, 119 area. Don't do what I did because I looked at this area here. I'm just going to take this area only, and I looked at the 200 SMA. I saw the push up, came back in, and a push up. If the 18 SMA in this down channel can hold me up and Disney gets a rounded bottom, I'd like to see the 38%, the 50% fib, and the 50 SMA eventually get to the 61.8 and the 116 SMA. If it falls through and it falls back below the 130 area, be careful of it because of the consolidation, then it can fall through this channel and fall back through, because remember, I'm counting on this area to hold me up, okay? Because this is the consolidation, this is the breakout of it, come back in, breakout, come back in, push up, come back in. And where am I sitting? Right in that area looking for a breakout. I'm again looking for a breakout. I hope it does work. Remember, praying does not solve an issue, but I see around this, and if this is the right area, that's good. If I'm wrong, I'll go back and buy at the 120, 117, 118, 119, 120 to accumulate a longer position for Disneyland. This is just a beta test. I tried getting in, see if this is going to give me a round bottom to push higher. I got in this area, see what it does, and I called it in the room on Tuesday. Let's take a look at ES, and I'm going to break it down a little bit more in detail regarding the volume profile and let you guys use it for your advantage. On the daily chart, let's just zoom in a little bit to show you what I see. We have a little gap that happened in the overnight. Remember the week before we had a gap here, then we pushed higher. So this gap is between 62 and 54. We have to stay above 62 in order to be bullish. Do not lose that area because it can fill the gap back down to the bottom of this channel instead of the up channel. And this is supposed to be blue. I have it yellow. Somehow I didn't change it. That's fine. We have to, in most sentiment is at 78. And what I'm going to do, we are pushed, we broke above, we stayed above the 38.2. Please remember, 62 and 54 area is the gap in the volume profile on Friday of the push higher. On Friday, we sold off and came back in. We need to hold this area. The sentiment is around 77, 78, 29, 77 in order to continue, and 82 will get us back to these prior candles, which I said earlier. We're going to go down now to 15-minute 5 days, and the reason why I'm doing this, I want to show you this was the prior in the overnight, or on Thursday's high. We came down and looked up, and we continued above the 74, 78, pushed up, retested the same consolidation area, did not fall through. Where did we fall through on Friday? To that 63.75. So it's 63.75 all the way down to the 54. So we got to fix this to edit. I'm going to make it a little higher so you guys can see it. And this is 63.75. Once it taps into this, watch what happens. So this is your area that you have to be afraid of. So we can come down here. You can see it a little bit more in detail. This is the push down, come back up, push down, consolidate, push up, and continue. So basically, this area has to be very important. The 29, 54, 53 area has to hold in order to continue. If it falls through, look for the backside of the 2900, 28, 96, 98 area before we can do anything about it, because we're trying to break above the channel. So let's take a look at the volume profile by using the monkey bars. This is actually 3 days, 30 minute. And what I'm going to do, instead of 3 days, 30 minute, we'll just move it up to a couple more days. Instead of 3 days, we'll just go 15 days and push OK. So on this 15-day plus or minus, is that only 15 days? Yep. Okay, show me 1, 2, 3, 4, 5, 6, 7. Why? Okay, let's go a little bit more. 20 days. Okay, that's a little bit better. Okay. When we consolidated in this area at the 94, 95, 93. We fell down, came back up, fell down, came back up. This is the area we got to keep an eye on. That 54 to the 62 area, 63. This is the gap in the volume. This was we tested it up here. If you notice, the high here was 29.59.50. So I would start looking in the 59 area, 62, 63 down to the 54. See if it holds, and to continue higher. We have a virgin pop right here. This is one. Okay, everybody, this is your pop. If in order to look lower, we're going to come back. This was retested here. You see the pop? This was in the overnight action, which we had was never retested. So this one was never, if you look at the low here, this is 88 quarter. In the overnight, 81.75. And this is what? The POC is around 29.11. So that's the close. So the POC is around 28.88. So we have two virgin POCs in order. If we fall through, this is our first two targets, then that area would be first target if we fall through the gaps. Other than that, I want you to trade what you see, not what you think. And if you like to check us out, we are at SolsticeATR.com, or you can look at my handle, CHRISI, CHRISI, Farah, on Twitter, or you can find me on YouTube.